the great meltup. Today we're gonna look at the great meltup. This is initially talked about by this channel, Clear Value Tax. So he was talking about. He came up with the idea of the great meltup, the hyperinflation of the U.S. dollar. So it's simple. It's just that U.S. is running massive deficit, and everything is just gonna not collapsing right away, but it's a process. So I'm gonna let you listen to the first to this, and then we will talk more.
If there's hyperinflation, if there's a melt up, in that type of situation, what happens? The stock market soars, property values soar, private equity investments soar, assets soar in value.
So basically, what he's saying is, what I like to look at this chart. This is the stock market in Venezuela. Okay, this is the Venezuela stock market. If you look down here, like since 2020, okay, since 2020, the stock market went from 500 now to about 155,000. So let's say 156,000. Okay, so let's do the math. Let's see how much that is. Okay, 156,000 uh, 156,000. So divided by 500. Okay, so you're gonna see it's about 312 times higher. That's the stock market for Venezuela since 2020. We know what happened, right? So hyperinflation kicks in. Since then, the stock market went this much higher, 312 times. So this is the great melt up in Venezuela. So this is not a new thing. This is not a like the first time this is happening. And it's all about a process. So when it talks about stock market rises, asset classes, asset prices rises, Bitcoin rises, everything rises. I'm going to show you a visual. This is the S&P 500. So if you look back, if it's up about 81% in the past 5 years. Okay, so that's not like too bad, but 85%, 85 past 5 years. That's just like the S&P 500. It's just like the top 500 companies put all in together. But if you're taking like the Nvidia, if you take like Tesla, all those companies, they are up tremendously, like thousands, and like it's like 10x, 11x higher than they were back in 2020. So now if you look at the Nasdaq, it's up 100%, 105%. If you look at the Dow Jones, 52%. If you look at the Bitcoin, right, it's up like 10x for 5 years, almost 10x. So that's the reality of the great melt up. Okay, so but what caused this? What's the like? What's the cause? It's not just nothing happens just like without a cause. There's a cause. There's a cause and effect. So Bitcoin is a technology because this channel is about Bitcoin, but we talk about gold as well. This is the price of gold. Okay, So it's not as impressive as Bitcoin chart, but it's still like raging higher, right? So it's like it went from like this was 2016, like in let's say 10 years, right? The past 10 years, gold is doing almost like a uh, 2x, 2.5x. Okay, so it's like a 2.5x, 2.5 times higher, right? So that tells you something, right? That tells you something. And in the past, let's say 5 years, in the past 5 years, it's almost double, right? It's almost double in the past 5 years, right? So it doubles in the past 5 years, and then we're gonna look at the Bitcoin price, of course, and it's about 893 high. Okay, so everything is going up now. Bitcoin has a scarcity built in. If you have a Bitcoin node on it, you can verify this yourself. You can come out here and then you can verify how many Bitcoins are already in circulation. You can't do that for gold. You can't do that for stocks. You can't do that for anything else. Not no other asset class provide this kind of um, audit. Right? You cannot audit anything else. You can't audit the Fed. You can't audit how much dollars are in circulation. But you can audit this. Everybody can audit it all together. You will find the same number. This is just the sum of all the Bitcoins already in circulation. Okay, so this is why Bitcoin is going up. There's a scarcity built in. There's a stock to flow. There's a difficulty. So that you can't have like more Bitcoin than you should have, right? And there's a proof of work you need to work to produce the Bitcoin. But now I was talking about the cause of the great melt up, like the everything going up, the everything bubble. So first of all, we have the debt, the U.S. national debt. And by the way, it's not just the U.S., it's a global debt. Like I talked about this in this channel for a while. The global debt is exploding. Okay. Yes, we have Doge, the government department for efficiency. This is reducing some of the deficit, so wasteful spending and all that. But still, the debt is still going up. That doesn't mean it's slowing down anyhow. It's like it's still going up, but it's just going up a little bit slower. So US is at 36 trillion, going to 37 trillion pretty soon. Last year they spent $7 trillion, like in a year, only 1 year. And you have the interest on the debt is over $1 trillion. Okay, what does the government gonna do? Well, they're gonna have to print. Okay, the U.S. government, the way they fund themselves is by money printing and debt. It's like think about like having a credit card, right? You're living on a credit card every time it kind of max out, and you get an increase on the limit from the bank. So every time you get an increase, you get an increase. That helps you um, keep your life expenses and then keep your lifestyle. So that's how U.S. is managing its deficit and expenses. There's a lot of liability, a lot of expenses for so many things. Now, this is like if you take for example defense and war, it's about $800 billion. Interest is higher. Okay, so the interest on the debt is is going to be even higher than Social Security. Social Security is like how much money the government is sending to the retirees at home. Okay, now let's see like the rate, the interest on the debt. So this is the Fed funding rate. This is when the Fed come out, the J Powell, talking about raising rate and lower rate. So since 20, this thing goes in a cycle. Every 2 to 4 years, they come up and they wanna raise rate, cut rate, stop, raise rate, cut rate, stop. Now, like since 2022, they started raising rate to fight inflation. So inflation come in. Inflation was in like 9%, went all the way to 9% at some point. So they went really quick and raised rate all the way up to 5.32%. So that means interest on your credit card is higher, interest on your mortgage goes higher. So that's what the Fed funds rate does. And then they stop at 2023. And then they wait there until September 2024. That's when they started to lower rate. And then they lower rate until now in like around say let's say February in January, around December. They did the last cut in December. And then they stopped since then. So now they're talking about, taking a break. But the reality is the interest on the 10-year yield. This chart, this is basically where the government get its funding. This is when investors come and give the government money at a certain rate. This is going up since then. Since 2020, the rate has gone up from 0.68% to all the way 4.5%. So now, and this rate, the rate is still going up because investors think, hey, inflation is higher than what the government telling me. So I better not believe in that fake numbers. I want more money. I want more return for my money. So that's why this rate is going up, because inflation is higher than what they say. Now, when you look at the rate, Fed fund rate, it's still at 4.33%. It's lower than the Treasury 10-year Treasury yield, okay, which is like the biggest massive pool of money for the government funding. So now, when is that number, right? So the number probably gonna go up and up more because inflation is way higher. Now, yes, I know a lot of people may want to think, oh yes, there is doge, they're gonna lower government expenses. In my opinion, this is a distraction. Doge is just as a distraction because it's like saying like, I want more government program to eliminate government programs. In my opinion, that just doesn't work. Yes, it may works for a while, maybe 1 year, 2 years, 3 years, but when the next administration come up, it's gonna fall because there's so much incentives to print, to spend, and waste money. So that's just in my opinion. So where does Bitcoin come up through that? Now, this is the great meltup. This is what happened in Germany. And the prices of things keeps on going up. Those are all those cash and money currency that was at use at the time. And the more the inflation keeps on going up, the more the government prints. And those papers are worthless. The true value of those papers is just the value of that paper. because their initial value is almost zero. Right? How much does a page of a paper cost you? Pretty much like less than what it worth as a bill. So this is what we had. We had a massive pile of money everywhere on the street because it was so worthless. I'm not saying we're gonna get to that stage, but I'm holding my breath. So this is, if you want to learn more, you can check on hyperinflation crisis 1923, and where you had a piece of bread like this cost you $1,000 billion, $1,000 billion. Not dollars. You can see mark, the currency of uh, Germany at the time. So at the end, I'm gonna come back to Bitcoin out here. The Bitcoin is just a the money for the internet and money for the next generation, in my opinion, because it's the only true and verifiably scarce things out there. People are just learning into it. People are just at the tipping point to understand what it is. Right now, we are at, if I look at the supply, how much Bitcoin out there, the we are at 19.8 million Bitcoin out there. So there are about 1.2 million left to be mined, in my opinion. 1.2 million left to be mined. And by 2028, there will be only 600,000 Bitcoin left to be mined for the next 100 years. Now, think about this. MicroStrategy gonna have probably almost double that amount by that time in 2028. Think about this, right? How many people, how many organizations gonna have this amount? And there's gonna be all the mining infrastructure for Bitcoin will be fighting for this amount in the next 100 years. And after this, there won't be any more Bitcoin to be mined. The system will be self-sustained with transaction fees. Every time there's a new block, transactions will be processed, will be funded by fees on the network. That's how Bitcoin will work, and that's how it shows. It already shows it could sustain itself by that, because every time the block reward drops, get cut in half, the system readjusts itself. Everybody, the free market readjusts, and then the system keeps on going. So you need to protect yourself. And in that video of the Great Meltup, the second video he did, he was talking about how you can protect yourself from the hyperinflation. You need asset. He was talking about owning a home, buying your own house, owning assets like the stock market. There's gonna be dips on the market. It's gonna be time when the market fluctuates. So you see massive price changes. So those times gonna be times when you buy the dip. And my favorite chart to look is to look at the chart of gold price, the percentage change every month in the Weimar hyperinflation. So you need to understand what you own. That's why when you see Bitcoin price goes up and down like this, these are all that kind of distraction. Just because you heard there's going to be a government efficiency program to reduce wasteful spending. that doesn't mean the dollar is going to go back to its initial value. It's not backed by gold anymore. They are not going to put it back to the gold standard. They're still going to be printing it out of thin air. So you have to understand what you own and how to protect yourself. In this video, he was in the how to protect yourself. He was talking about gold, silver. You may not want to use Bitcoin, and I don't want to argue with you, but you need something like proper food, housing, gold, silver, things that will keep their value. Because the currency is just something, it's just a current use case to exchange for something else. The value is not in the currency. The value is in the things you buy. So this is the great meltup and Bitcoin. I hope you enjoyed this video. Please comment, subscribe, and I will see you again in the next PieCover.